Hey everybody, this is my first video for volume leaders. Today I'm going to talk about some basic site mechanics and discuss how I use the site every day to try and identify opportunities based on institutional activity. But before I begin, I want to start by discussing sort of the basic premise behind the site and probably the most important concept to remember. And that concept is that price is pushed. Price has no self-awareness. It doesn't know when it's too high or too low. It doesn't care about some arbitrary trend line on a candlestick chart and who's in office or really anything else. It's just a measure of the forces that act upon it, meaning buying or the absence of buying. And the only entities that can act upon price in such a way as to meaningfully move it from point A to point B are institutions. Now, the good news is that institutions leave footprints wherever they go. And what we have now is a system that helps us identify when and where and how institutions are trading so that we can try our best to do what they do. So let's get started here. I'll start with the screen that I use the most. Right now we're looking at the home page. If you go up and click Trades here in the top menu, this brings you to by default, the list of disproportionately large trades. And disproportionately large trades are trades that are considered large enough to pay attention to. The basic measure that I use is that they have to be 5 times larger than average or more. And the way to tell how big they are is by looking at the average column here. This gives you the average size in dollars. And then the multiplier column, which is mult here just because of space, tells you how much larger than average a particular trade is. So in this first example, this trade here, 585,000 shares, $107 million, is 9.19 times larger than average. It also falls in the 98.82 percentile. It's not ranked in the top 100. And the last time it traded this large was November 15th, 2022. So each trade is automatically put in this list if it meets these minimum criteria, where it's got to be 5 times larger than average or normal. So what I do on a given day, I do this throughout the day and I do this after the close, is just monitor this list and look for trades that stand out. And there are different ways to identify a trade as standing out enough to be meaningful. One is by looking at this multiplier. You want to find the trades that are the largest. So relative to average size, the largest trades here can be sorted, and we can quickly identify the ones that are most meaningful or most probable to be meaningful. And when you sort them in descending order, you see that we've got XLF and ENPH and BAC and so on, all showing these very large relative sizes. This is 217 times larger than average. This is 136 times larger than average, and so on. And if you see them highlighted in yellow in this multiplier column, that just means they're greater than 20 times larger than average. And this is just an arbitrary measure that I came up with. Some people might think that 10 times larger than average is enough. Some people might be looking for those that are 50 or 80 or 100 times larger than average to trade against. But the larger it is, the more likely it is to be defended and defended successfully. So that's how the multiplier column works here. The next one I want to talk about is the percentile column. This is just another way to measure size. If it's in the 99.99th percentile, that means that it's larger than 99.99% of all trades going back to the beginning of time, which in this case, as of the time of this video, is January 1st, 2008. So for all XLF trades that have ever been made going back 13 years or 14 years, this particular trade on this day falls in the 99.9th percentile. It's also ranked 30th largest, again, against all other trades for XLF for its entire, for the length of time that this has been tracked. And I continue to add new data regularly, so this may be in the future a larger data set than what we currently have. And then this column here, which is the it says last. This is the last time that a trade of this size, measured in dollars, printed. So the last time that XLF traded as large as it did today, and I'm recording this video as of November 18th, was April 4th, 2022, so 7 or so months ago. It's been a while. And this column tells you about rarity. So size alone doesn't always tell you enough about a trade to let you know that it's sufficiently large or sufficiently rare. Because, for example, when you have a stock like Apple, it might trade an enormous volume on a regular basis, and if it does it twice a week or 3 times a week, it's not as meaningful or as important. But in this particular case, this is a very meaningful trade. It's been 7 months since it traded this large. And if we look into this more closely, we'll probably find that it's at an important support or resistance level. So each of these columns here on this screen can be sorted. Right now it's sorted by multiplier. If we want to sort by rank, we can do that too. And this is a very important metric as well, knowing not just how large it is, but how large it is relative to all the other trades in its data set. So we can now look for any trade that is the largest ever for a particular stock. We can see now that these are top ranked trades. We can see these are second ranked, third ranked, and so on. So sometimes the largest ranked trade isn't necessarily that large relative to its average size. And you can see here that DRV, which is 3X Bear Real Estate, excuse me, ETF, the largest trade in its entire data set in the 100th percentile is only 5 times larger than normal. So if you were looking for trades that were 10x or 20x or 50x, you might overlook this. But this column here tells you something that these other columns can't tell you. So rank is an important way to measure how rare a trade is, even if the size isn't so disproportionately large that it stands out. And then, of course, the last column. Sometimes trades are rare insofar as they haven't happened in a long time, but maybe they're not ranked as high, or maybe they don't fall in the top 1% of the percentile, and that could be because a particular stock has maybe gone dormant for a while and institutions have been ignoring it for a while. So this is just another way to say, hey, some unusual volume came in, and it can be measured relative to the last time we saw volume of this size come in. So in this case, we have this TZA trade, which I tweeted about, and this checks all the boxes. It's sufficiently large, 28 times larger than normal, and this is again measured in dollars and not volume. It's in the 100th percentile. It's the second ranked trade overall, and I'll talk about this little icon here shortly. And it's the largest in 11 years. So if a trade is so large that it's larger than any other trade in 11 years, it's something you want to pay attention to. It's something that might be meaningful. It might be an area that you can anticipate a turn, or where you can anticipate a large magnitude move. So this screen, the whole purpose of this is to tell you where to look for trades, rather than guessing based on any number of other metrics or any other charting mechanisms that we might have. This tells us specifically where institutions are positioned. This tells us that on this day, at this time, at this price, an institution of sufficient means has placed a very large trade. And that's important because we know that they are likely to defend that trade and push price away from that point. Now, the tricky part is always trying to figure out which direction they're going to take it. But this at least tells us that an institution has taken a stand and put some money on the table, or alternatively, taken some money off the table. and both are important for different reasons. All right, now that we've talked about some basic site mechanics, I'm going to walk you through my thought process leading into the CPI back on November 9th, or the close of November 9th, leading into the pre-market activity on November 10th. So to do that, I'm going to first change the date on this dropdown to the 9th. And I'm going to click repaint. What that's going to do is reload all the disproportionately large trades for that day, so we see a different data set. And again, part of my normal routine is to look at the close and see what they're doing after hours, because after hours is when institutions position themselves for the next day. So the closing prints and the after hour prints are the most important, in my opinion, and most likely to reveal the intents of institutions. So here we are looking at November 9th. I typically start by sorting by rank. I want to see the top ranked trades. I want to see, I find it to be the most simple and effective way to measure relative size. So when I looked at this, I saw some number one trades come in here. These four aren't names that jump out at me as meaningful. And these three are sufficiently small, so I ignore them. 1x, 1.6x, these aren't things I care about. But then I see these large cap ETFs here. I see VTI and IVV, and they both came in at second and third ranked trades. With IVV, I see the number 2 and the number 3. That really stands out to me as something important when an institution is committing that much relative size at one point in time. So we can see here that IVV had 2.5 million shares and 2.6 million shares, 930 million and 980 million. So combined, we're looking at $1.8 billion committed at 4:15 p.m. on an ETF that is comprised of growth stocks. This particular ETF is Apple and Microsoft and Google and Amazon and all the big boys. So this caught my eye. Then I look at VTI. Very similar structure, a lot of growth names. And so I immediately go and I want to see what's going on. I see that this VTI is the largest trade since 2010. So it's been 12 years since an institution has committed that much money to a single trade. That is a big, big red flag for me. Something I want to look into. Maybe not red flag, maybe it's a green flag. But the point is it stands out, and I want to do more research on it. Likewise, these two IVV trades, they're not nearly as rare as that VTI trade, but they're still sufficiently rare. It's been a year since size of this, or this much size, has traded for this guy. So the first thing I'm going to do is I'm going to pull up a chart and look at it short term. And I'm going to click this here. It's going to pull up IVV, and we're going to see that throughout the day it's fallen from 384 to 376. And right here at the low of the day, institutions are piling in. This often suggests either large-scale buying or short covering. We can look at this chart in more detail. We can change these criteria over here and see, by default it's only showing the 3 largest trades, but we can say, well, show me the 10 largest trades and let's see what happens. I want to see if even more volume shows up. And you can see there's a smattering of other smaller trades that have come in here at the close, and you can see that they largely ignored it as price declined throughout the day. So now I've flipped over here and we're looking at the VTI chart. Similar to IVV, it doesn't get nearly the volume that SPY and QQQ get, but it is meaningful when you see such a disproportionately large trade. And we've got 2 here at the low of day. We've got one for 5 million, and you can hover over these trades and see a little bit of detail. You can see this is ranked 4th, and it's 113 times larger than average. And we've got another one that came in 6 minutes later for 5.25 million, 187 times larger than average, 119 times larger than average, and ranked 2nd. So in one 6-minute span, we have the 2nd and 4th ranked trades coming in right here at the low of the day. So we have IVV and we have VTI, and we know that they're comprised very similarly. And so this makes me start to think that given that CPI is the next morning, that this is positioning for that event, and either the news is out, the leak is out, and they know, these institutions know what it's going to say, or it doesn't matter what it's going to say, and they've already decided that they want to do something with price regardless. So at this point, you have to start to think, what makes the most sense here? Is this buying or selling? Are they trying to take it up or take it down? And the thought process that goes into my head over and over when I look at patterns like this is, if they wanted to sell, why did they wait till the end of the day? Why did they wait until after hours? Why didn't they start selling up here at 191.50 at the open or throughout the day? They had all day to decide what to do. If it was selling, why would it be here? And that doesn't mean that it can't be selling. It is possible, but probabilities suggest that if they wait for price to fall all day long and then they pile in at the low, it's more likely to be buying, because institutions buy low and they sell high. So at this point, I have a hunch that it's buying. Of course, I can't prove it. But I start thinking about, let's see how prices behaved prior to today. Let's zoom out a little bit. And so we can change the date range on this chart and rebuild it and see where price has taken us, or where price was before. And we see there was a very large trade here, a 5 million share trade, just a few days ago, so 8 days prior, at a much higher price. And this suggests, although we can never know for sure, that institutions sold or shorted in this zone right here and let price fall. And that's exactly what price did. So they shorted or they sold, price oscillated around, and then down here at a low value, a lower price rather, they presumably bought. This is what I'm thinking, that they have decided that they want to buy into CPI. And the reasons don't matter. It never matters why, and trying to figure out why is a useless exercise in my opinion. What matters is that we know a trade took place. We know 2 trades took place. We know they're enormous, and we know that it's not just limited to this one stock or this one ETF, but we've seen it now in 2 ETFs that are very similar. So I start to think about whether or not, or how I want to position myself for the next day. I know that it's just based on experience. It's not likely that price is going to do much overnight going into an event like this. So I'm thinking at this point that I want to make sure that I'm positioned, either not positioned short, or perhaps maybe I'll take a long position. But I don't want to be positioned short, because I don't think that the probabilities are in my favor of price continuing to decline here. When we look at a chart like this, where we've got all this volume here at a relative low, and we also see that this level here is behaving somewhat like support. We've seen price come down and test, come back up, test again, come back up, and now here on this third test, institutions have piled in right before a very meaningful data release. So this suggests to me that I should expect a bullish outcome. It doesn't mean I have to take a position. It just means that if I'm going to take a position, I probably want to err on the long side in this scenario. So at this point, now that the dust has settled, we know that CPI came in a little cool. Let's look and see how price behaved. So we can change the chart date range to add an additional day to the end of it, and we'll see that VTI, just like every other stock, exploded upwards. And in a few seconds, it had moved $6 up, and it continued up throughout the day. And this is the sort of magnitude you would expect when you see a disproportionately large trade. This tells you where institutions were positioned and how heavily they were positioned and how much conviction they had. This suggests a lot of conviction. They're sure that they were going to take price up, and they were going to take it up meaningfully. And that's what they did. So price rises instantly. It continues to ascend all day long. If we look now at the 11th, we can see that price continued on. We got a decent sized trade here at the this is a late print here, so it came in on the morning of the 11th, but it was actually placed on the afternoon of the 10th. But it was likely selling, but it wasn't sufficiently large to stop price from advancing. This is some profit taking here. This is them selling into strength. And then price continues upward throughout the rest of the day, Friday. So in 2 days, we saw VTI go from 188 to 200, which is that's an enormous move. And almost any way you trade that on the long side, you're going to do just fine. Some people might just want that pop. Some people might, not even be able to trade until the open. Since this happened in the first hour, in theory, you could have still gotten in at the open and ridden it up a little further. You could have traded shares in the after hours session when you saw this trade print and take a speculative position. And knowing that this is comprised of growth stocks that are heavily weighted in SPY and QQQ and just about every other ETF that measures the broad market, you would expect a large move, and you would have ample time to position yourself for it. Futures traders could set up a futures trade in the Globex session. So that's it. We see here that price has behaved in a manner which is consistent with the size of the trade and the rarity of the trade. And of course, the media and all the talking heads are going to write this off to a cool print, and the algos reacted a certain way. And that's not untrue, but the positions were set long in advance. Institutions were ready for this. They had planned for this. They brought price down to a support level that they wanted to go long in, and then they did. And then the rest is history. So, in conclusion, coming back to the large print screen here, this isn't something that anybody can't do. This is data presenting to you institutional positioning. It's providing context around these trades so that you have an understanding of how large and how rare and how unusual and how meaningful. You have some understanding of how price has behaved prior to these trades, and you have some ability to take this information and perhaps compare it with your own technical analysis. You can these things are really the most effective when you already have some kind of bias and you see these institutional trades show up that can then confirm your bias. So if you had price coming into a support level, and this could be based on any technical method you may choose, and then you see volume show up, that tells you that institutions are planning to take action at this point. If price is coming into support and you see volume show up, that's a good indication that they might take it back up. And if price is approaching resistance from below and you see large volume show up, that's an indication that they're selling into it and that price may come back down. It's not an exact science. There are no guarantees. This is just one data point to consider. But if you can understand what institutions are doing and when and where they're doing it, you have a place to define risk. You can more easily know what your parameters are, when you should act or when you should not act. Some of these signals are signals to get out of a trade or to avoid a trade rather than to get in. These aren't necessarily lists of places where you should automatically go and take a trade. And they don't always tell you to go long, and they don't always tell you to go short. It's just a place, a means by which you can understand or get a little bit more insight into what institutions are doing. And that's it. So if you have questions, I've got, you can email at info@volumeleaders.com. There's a link down here at the bottom of the site. You can find me on Twitter @volumeleaders. Send me a DM. I always have my DMs open if you want to ask a question, or you have a comment or some feedback, or there's a bug on the site or whatever. Let me know. I'm here to help, and I hope you enjoy this video, and I'll make some more for you soon. Thanks, guys.